again to my show, Searching for Integrity. My name really is John Smith, and I'm searching for people with integrity. Why? Because our country suffers from IDD, integrity deficit disorder. Today, we have the beginning of very interesting material and actions, which will take us to a billionaire who has thoughts on recession, inflation, and Sam Bankman-Fried. Sure, you've heard those names recently. I might get some more information with those people. Billionaire investor Leon Cooperman says the S&P 500 will not hit a new high for a long time. That's stock market for a long time, and predicts a U.S. recession and stubborn inflation. Those two are knockouts. Gonna hurt. Leon Cooperman expects the S&P 500 to eke out mediocre returns for the rest of this decade. Okay, this is 22. We got 8 more years for this decade. The billionaire investor predicts a U.S. recession and stubbornly high inflation. Cooperman trashed crypto, saying he was happy the government never endorsed it. Plainly put, U.S. stocks will suffer a hangover for years, and the U.S. economy will endure stubborn inflation and slump into recession. Leon Cooperman has warned. He also trashed cryptocurrencies following the recent collapse of Sam Bankman-Fried FTX exchange. We've been through probably the most speculative period in our financial history, aided and abetted by foolish fiscal and monetary policy. The billionaire investor told us on Wednesday. Cooperman pointed to this boom in cryptocurrencies, special purpose acquisition companies, SPACs, and commission-free trading during the pandemic, fueled by near zero interest rates and historic amounts of government stimulus. He warned that after years of easy money and rampant speculation, he would take a while for markets to recover and reach new highs. We're not going to pull back into a new bull market anytime soon. Not at all. That's not the way the world works. Cooperman said, cautioning a crisis might be necessary before the next boom can begin. The veteran stock picker who converted his Omega Advisors hedge fund into a family office in 2008, right after the credit crisis, issued a gloomy forecast for the S&P 500. The 4,800 high this year will be high for quite some time, he said about the benchmark stock index. Cooperman pegged the market's current level of around 4,000 points as reasonable in a recession and predicted the S&P 500's annual returns would be mostly above zero for the rest of this decade. I really believe the market is very fully valued and the average is going nowhere. And the action is going to be in individual stocks, he said. Rising prices and declining growth. A prolonged economic downturn and elevated inflation lie ahead for the U.S., Cooperman said. My recession thesis is the basic belief that we've borrowed from the future and we're going into a period of time where that borrowing has to be given back. Inflation is going to remain higher than generally anticipated because of the tight labor. He continued referring to the shortage of U.S. workers that has pushed up wages in recent years. U.S. inflation has surged to a 40-year high this year, prompting the Federal Reserve to hike interest rates from virtually zero in March to about 4% today, and a signal they could top 5% next year. Higher rates deter spending, borrowing, and hiring. That tends to relieve upward pressure on prices, but can also sap economic growth and boost unemployment. Cooperman said recessions typically last around a year, but can persist for longer. Only when they strike does it become clear if they're mild or severe, he believes. Bashing Bitcoin. The former boss of Goldman Sachs Asset Management Division took aim at crypto in the wake of exchange FTX's collapse, which has tanked coin prices and stoked fears of an industry-wide meltdown. I just thank God that the government never endorsed this crap, Cooperman said. He largely agreed with Warren Buffett and Charlie Munger, who have dismissed Bitcoin as toxic and worthless, he noted. Cooperman recalled that he took his money out of Bernie Madoff's fund, so he couldn't understand how the infamous Ponzi schemer consistently generated such large returns for his investors. When something looks too good to be true, the odds are it's not true, he said. Interesting thoughts from Mr. Cooperman. I have some information on the recession from the World Bank. This will make your hand stand up as well, and your hair stand up, I should say. As central banks across the world simultaneously hike interest rates in response to inflation, the world may be edging toward a global recession in 2023, and a string of financial crises in emerging market and developing economies that would do them lasting harm, according to a comprehensive new study by the World Bank. Central banks around the world have been raising interest rates this year with a degree of synchronicity not seen over the past 5 decades, a trend that is likely to continue well into next year, according to the report. Yet the currently expected trajectory of interest rate increases and other policy actions may not be sufficient to bring global inflation back down to levels seen before the pandemic. Investors expect central banks to raise global monetary policy rates to almost 4% through 2023, an increase of more than 2% points over the 2021 average. Unless supply disruptions and labor market pressures subside, those interest rate increases could leave the global core inflation rate, excluding energy, at about 5% in 2023, nearly double the 5-year average before the pandemic, the study. That's where I see growth. Subtle psychopaths, the kind who don't stab you, often intelligent, charming, and accomplished. I believe, too, are currently in the news. Sam Bankman-Fried's crypto trading firm FTX collapsed last month. We're still in the why did he do it phase. Was it deliberate? Deception? Untidy bookkeeping? Visionaries often leave the details to others. We make mysteries where they aren't any. He had a great life while it worked. He made himself famous, rich, admired, friend of presidents and prime ministers, the darling of a major political party. To the Democrats, he was the biggest thing since George Soros. And somehow a valuation of $32 billion was, in a matter of weeks, turned into or revealed as nothing. FTX filed for bankruptcy on November the 11th, and FTX's new CEO, John Ray, said he believed gross negligence was involved and a substantial portion of FTX customers' assets may be missing or stolen. Soon after, the crypto firm BlockFi filed for bankruptcy in New Jersey and Bermuda. A peculiarity of subtle psychopaths in that while they didn't seem to feel shame, they are preoccupied with being thought of as highly moral. This was a part of her original myth. A relative's illness makes her sensitive to the statistics of suffering. Mr. Bankman-Fried gave away millions and became the public face of a movement called effective altruism. He was just trying to help the less fortunate live better lives. And he was so modest about it, he is eschewing material things clad in tough sandals, a thin t-shirt, shorts, like the young St. Francis, stripping himself naked with his robes that he might be sold for the poor. Back to the growth would slow to 0.5% in 2023 and 0.4% contraction in per capita terms. That would meet their technical definition of global recession. Global growth is slowly, sharply, with further slowing likely as more countries fall into recession. My deep concern is that this trend will persist with long-lasting consequences that are devastating for people in emerging market and developing economies. He said, World Bank Group President David Malpass, to achieve low inflation rates, currency stability, and faster growth, policymakers could shift their focus from reducing consumption to boosting production. Policies should seek to generate additional investment and improvement productivity and capital allocation, which are critical for growth and poverty. Other economic policymakers will need to join in the fight against inflation, particularly by taking strong steps to boost global supply. These include easing labor market constraints, policy measures needed to help increase labor force participation, and reduce price pressures. Labor market policies can facilitate the reallocation of displaced workers. Global growth is slowly, sharply, with further slowing likely as more countries fall into recession. My deep concern is that these trends will persist with long-lasting consequences that are devastating for people in emerging market and developing economies, said world-class David Malpass. To achieve low inflation rates, currency stability, and faster growth, policymakers could shift their focus from reducing consumption to boosting production. Policies should seek to generate additional investment and improve productivity and capital allocation, which are critical for growth and poverty reduction. These study highlights the usually the unusually fraught circumstances under which central banks are fighting inflation today. Several historical indicators of global recessions are already flashing warnings. The global economy is now on its steepest slowdown following a post-recession since recovery 1970. Global consumer confidence has already suffered a much sharper decline than in the run-up to previous global recessions. The world's three largest economies, the US, China, and the Euro area, have been slowly sharpening. Under these circumstances, even a moderate hit to the global economy over the next year could tip into recession. The study relies on insights from previous global recessions to analyze the recent evolution of economic activity and presents the series scenarios for 2022 to 2024. The slowdown, such as that one now underway, typically calls for countercyclical policy to support activity. However, the threat of inflation and limited fiscal space are spurring policymakers in many countries to withdraw policy support, even as the global economy slows sharply. The experience of the 1970s, the policy responses to the 1975 global recession, the subsequent period of stagflation, and the global recession of 1982 illustrate the risk of allowing inflation to remain elevated for a long while growth is weak. The 1982 global recession coincided with the second lowest growth rate in developing economies ever. This is not a good forecast. We're going to have many people that are aware of it, pepper of it. Bankers, big banks in the U.S. are making statements now with respect to it's coming, it's coming, it's coming, it's not going to be good, it's not going to be good. Yet people don't really pay attention that much to it, and they should, because that's going to happen. That's going to happen for sure. Next item, I should say. FTX and Sam Bankman-Fried, your guide to the crypto crash. The founder of FTX was the paragon of crypto, then the cautionary tale. This guide will help you understand what happened. Sam Bankman-Fried was heralded as the savior of crypto. In recent weeks, his empire collapsed. That's what you need to know about the unraveling of FTX, including its founder's rise to fame, how the firm failed, and the collateral damage to customers and the crypto industry at large. FTX founder Sam Bankman-Fried was the paragon of crypto. Mr. Bankman-Fried, often referred to as SBF, vaulted to celebrity with its attempts to make his crypto exchange into a household name. The 30-year-old billionaire's eccentric, unkept appearance and created an aura of genius. Venture capitalists got on board, high-profile athletes and musicians, and a wave of FTX ad encouraged regular people to use the exchange to tap crypto's money-making potential. Mr. Bankman-Fried and FTX were among the biggest donors in the recent midterm election cycle, boosting their visibility in Washington. And when other crypto firms started collapsing this year, the SBF extended loans to prop up ailing competitors. The FTX's ties with Alameda, its sister trading firm, led to do its undoing. Before creating FTX, Mr. Bankman-Fried founded Alameda Research, and it became a major player in crypto market making and institutional trading. Mr. Bankman-Fried recruited individuals whom he met while both were traders at Jane Street Capital. And she later became chief executive. Mr. Bankman-Fried remained CEO of FTX, crypto exchange. But even when Mr. Bankman-Fried was no longer at Alameda's helm, he still owned 90% of it, according to bankruptcy filings. Alameda also traded on FTX. Mr. Bankman-Fried repeatedly said that Alameda didn't have any special privileges on FTX. Recent revelations cast doubt on his claims. According to bankruptcy filings, Alameda, in a secret exemption from the exchange's process for liquidating bad trades, a loophole that meant Alameda could take on more risk than others. Alameda also doled out billions to buy stakes in startups. It often used FTT, which is FTX's own cryptocurrency, as collateral for borrowing. Mr. Bankman-Fried and Ms. were at times romantically involved. That's not good work at the office. The crypto prices crashed. When crypto prices plunged earlier this year, Alameda's risky bets soured. Facing potential catastrophe, Mr. Bankman-Fried made a fateful decision. FTX decided to lend billions of dollars worth of customer assets to help Alameda cover its funding gap. FTX's problems tumbled into the open on November 2nd when CoinDesk published a report questioning the financial health of both FTX and Alameda. It indicated that much of the Alameda's balance sheet was made of FTT. The report ended with a bang. Changpeng Zhao, the billionaire founder of rival exchange Binance, said he would dump his FTT holdings. Customers panicked and started yanking their money out. Crunched for cash, FTX agreed to sell itself to Binance, but Binance quickly changed its mind. Shortly after, SBF resigned and FTX filed for bankruptcy. The restructuring team says FTX is a giant mess. John J. Ray has helped oversee some of the highest profile bankruptcies ever, including Enron. Mr. Ray, now the new CEO of FTX, says he's never seen anything as bad as FTX. The firm made its first appearance in Delaware bankruptcy court on November the 22nd. In a court filing, Mr. Ray called the disarray of FTX unprecedented. According to him, supervisors approved payment requests with emojis. Homes were purchased for employees with corporate funds. Mr. Bankman-Fried communicated with messages sent to auto-delete after a short period and encouraged employees to do the same. Bank accounts and company financials weren't tracked. Software was used to conceal the misuse of customer money. Many employees have quit recently because saying they were in the dark. They didn't know what was going on. Will FTX customers ever see their money again? It's hard to say, but people are certainly getting worried. Court findings from Mr. Ray and those working with him make clear that they don't know how much cash or crypto they will ultimately find at FTX. The newly appointed chief executive asked for patience. A court filing late Monday confirmed that the new management has found about 1.2 billion worth of cash, about 740 million worth of cryptocurrency has been recovered. The majority has not been found. FTX owns its 50 largest creditors, a combined 3.1 billion. The firm's lawyers estimate there may be more than 1 million creditors. Other financial oddities remain. SBF himself cashed out 300 million, 420 million funding around. More than 370 million appears to be missing in a possible hack, which occurred after the bankruptcy filing. The Securities and Exchange Commission and Justice Department are investigating FTX. FTX's collapse is reverberating through the crypto world. With major exchange and trading firm under its umbrella, many loans to and from other players in various tokens with market values once in the billions of dollars, FTX's tentacles and extended wide across the industry. Crypto lender BlockFi Inc., which got a line of credit from FTX earlier this year, is preparing a potential bankruptcy filing. Genesis Global Capital, which had loans outstanding to Alameda, is trying to quickly raise a heap of cash. Both had paused withdrawals. With all that in mind, is crypto doomed? Maybe. Mr. Bankman-Fried said he didn't know the scale of the problem. Since his departure from FTX, Mr. Bankman-Fried hasn't shied away from the spotlight. Speaking at the New York Times Deal Book Summit on November 30th, he said he didn't intend to commit any fraud or just use customer funds to back bets at Alameda. Mr. Bankman-Fried also tried to distance himself from Alameda. I didn't know exactly what was going on, he said, via live stream from the Bahamas. Well, that's the way it is. The Bahamas now certainly is the situation that we have. Next, of course, would be the FTX collapse. It draws Senate hearing scrutiny as lawmakers push for crypto oversight. And in Washington, senators are prepared to dive head on to see what they can do about it. I will address this matter in our next show, coming this next week. And I'm sure that we'll have more data available. And I believe it's going to be long and drawn out. And it's something that people are going to have to live with, whether they're being hammered by the recession or hammered because they were an investor and they were greedy. Nevertheless, I would like to say to my listeners, thank you. Thank you very much. And my listeners are tuning in to Searching for Integrity more and more and more. So long and happy trails to all.